Villani, managing partner of Transform Group. Julian Kwan, the founder of 2H Cap. Jay, is Jay Oberai here? He is, right?
I just saw Jay.
You're up
There he is.
again. Let's go, Jay. We heard from him before. We want him back. And Bruce. Oh, boom, everybody's here. Let's talk security tokens.
Okay, well, thanks for that great speech and kind of education on the actual kind of the process and the actual back office operations of how kind of how stocks work. No one knows that. I mean, not many folks. I'm a kind of a NASDAQ kind of exchange nerd who knows all about that stuff, and I put people to sleep many times. You did not, though, which is great. So great round of applause for him, first to Bruce Fenton. All right, so we're going to start this off. We have one mic. We have two mics. So we'll let you start this off as, you know, just kind of give the overview of who you are, and what is your comment about what the future of the STO market is going to look like at a very high level. And then I think that we should really use what Bruce actually went through as a way to kind of have that basic conversation, including why did ICOs actually start? So I'll start with you, Jay.
Sure. My name is Jay Oberai. I founded Synergy Asset Management 18 years ago. We're a Swiss family office, $2.5 billion under management, 150 clients. We do discretionary asset management, the boring old Swiss way, which has been served our clients pretty well. But as I was saying earlier in previous panel, I do think that the returns are going to come down a bit on traditional assets. So we need to find new ways, new ventures, new opportunities. And so that's why I'm here. STOs is absolutely, it's going to become bigger and bigger and bigger part of our portfolios, from 1% to 5% to 10%. As I said earlier, as part of the alternatives. However, I believe that the STOs themselves, at the moment we were just calling them STOs, but they're going to be very, very many different kinds of STOs. It's currently working on one STO, which basically gives you 50% of the revenues of the business. So you don't really own an equity or security token. It's actually a revenue share token and whatever. So there's going to be lots and lots of versions of those. We can talk about those later.
Hi, my name is Julian. I run my own money, but I also run Investor Crowd, which is the first platform in Asia based out of Singapore to launch security tokens. We're building a security token exchange as well. Agree with a lot of Bruce's very exciting points there. One thing I think about the most is if you think about sort of even an asset class like private equity, real estate, liquidity, and the only typical major issue with it is being stuck in the deal for 7 to 10 years. And the other thing is when you think about running an investment platform, you typically only offer investors a new deal that's raising money. If you think about just focusing on real estate, there's thousands and thousands more times existing product than there is new product to raise. So if you could start unlocking some of that liquidity, the volume and the diversity and the asset classes that are going to be available for all investors is just insanely different and much, much, much bigger. So that's why we've been focusing on the space for the last year and a half or so.
Yeah, I agree. I think there's going to be a lot of different types of securities. As you saw, the definition is very, very broad. So there's a lot of co-ops, all kinds of neat things that weren't tradable before that can become tradable now because of a token, because the ledger was a real pain in the neck to manage. Now it's not. So I think that'll create a lot of new types of securities, and then plain old low-hanging fruit like startups, small businesses. I mean, I'd love to see. There's a lot of businesses, and also you folks would know this as being active investors. There's a ton of businesses that are in the $10 to $50 million range that just don't really appeal to family offices and VCs and kind of things like that. Laundromat, printing supply companies or something like that. But it'd be great if these were unlocked and local people could buy them, employees, that kind of thing.
Yeah, so I think that one of the actual main issues that we should actually speak about is why was the ICO market actually created? Or you're basically saying that they're scams, and they're all scams because they don't really have any usage. But isn't that kind of like the way the capital markets work? When it's a new kind of technology infrastructure, you get this big bubble as everybody races to it, and then you just have a lot of fallout, and then the real businesses start to grow after the chasm is crossed. So how can you say that the tokens the token economic concept, it's almost like you basically said that the token economic concept doesn't really work. Is that true or not, Bruce?
Well, the economics for most utility token ICOs that raised money in this 2017 batch, I would say, are broken. But certainly there's experimentation. Now, and I don't think I said scam. There's certainly some scams, but I don't think most are scams. I think most are just a bad business model. And
Right.
you should differentiate, because I support bad business models. I think that stupid ideas are a good thing. I want people to do stupid stuff, and go ahead and issue your token with bad terms, because what the hell do I know? 1 out of 100 might work, and if there's thousands of them, we're going to get some cool stuff that develops. So I'm all for it,
Okay.
even if I wouldn't invest.
So, Jay, so I just want to hear your actual comments, because you started off as a kind of utility token. At some point, you actually kind of considering it, and then you realized, oh, wait a second, I'm going to do a dividend. I can't do that.
Yeah, actually, it's pretty cool for us because we're doing a digitalized online wealth platform for clients between $100,000 and $500,000. But we're going to give them the same investment opportunities that we give our billionaire clients. So go for high returns.
Like a 16% return?
Which, yeah, between 12 and 16%. But to do this, what we were initially thought was it'll be a utility token. But obviously, it's not a utility. It's a security token. It's basically, well, we manage clients' money, and out of that management fees, we'll give 50% to the security token holders. However, phase 2, which will be the future, will be a utility token. If I can create $1 trillion of wealth managed with 500,000 clients, each with $100,000 or whatever, and I created a universe within that where utility tokens could be used for doing things within that group and that organization of sharing ideas, sharing things within that community, it could work. For example, saying that I want to help funds that help the universe, okay, global warming and all this. And so any client that invests in that kind of fund will get a token, utility token, which will help him to get a discount on something else. So then it would that be a utility token?
Depends on the way that the terms
If it stays
work.
within a network?
Some things, if you do them as a pre-sale of a product, there's a different category. But once things trade, a lot of them become securities. So I think that you'll have kind of what we would call a hybrid. But in the U.S., a hybrid would still be considered a security.
But here it won't trade. It won't have a
Oh, okay.
itself, right? It's a utility being used within a network to do things. Why does a utility have to have a value?
I don't know. I mean, I'd have to know more about it.
Yeah, well, I don't hate ICOs. I thought the system.
Oh, that on you? Or went off?
Myself personally, the ICOs led me and my business into sort of STO land and take the good things and implement the good things out of it and implement into the STO land. I still think that there are some good ICO projects, and I think the mission has been forgotten. The mission of the ICO, in my mind, was let's give the ownership to the users, build the system, and the ownership's in the hands of the users versus the centralized company. But where it's gone wrong is that I don't know if there's enough incentive or enough good teams to have actually built that, but they were different things. And as like now, the STOs, they're not currencies, they're not utilities, they're just shares, they're just digital shares in real things.
Yes.
But they're a better way to hold them. And everyone's getting massively confused around the token being something magical, but the real thing is, when we look at things, we don't want to invest into anything unless we'd invest to it without the token. Because right now, the biggest value proposition is, we know it's all coming, but one of the biggest value propositions is liquidity. But the exchanges aren't open, ours included. So if that never happens, or 5 billion, if every single security token, every single offering becomes a security token offering, which will happen, then there's going to be, if you thought getting an ICO listed in a cryptocurrency was hard, getting an STO listed in a security token exchange is going to be extremely hard. But so I just think that they're very, very different. I actually think STO growth might save a lot of the ICOs as well.
Interesting. So, Bruce, so why do we need a security token? Because the question is, if the markets are functional, and I know that we have all these, and there are markets for these kind of alt assets. You can trade the LPs in venture funds and actually private equity funds already. I mean, it's not very fluid. But what is the real reason of why we have to do a securitized? I mean, I have my own thoughts, and I'm actually pro that process. And I think a lot of it has to do with the back office operational issue. But what do you think is the most killer app of why we want to use a blockchain and a kind of SEO framework?
I think it really just comes down to the ledger and having not needing, when you know what's true because of what your peers say are true, rather than relying on a central office, that does two things. One, it enables you to trade with the whole world, and that opens up a whole bunch of opportunities. You can invest in emerging markets and small businesses, all kinds of things that you wouldn't be able to do. And then the second thing is it enables the business owners to have capital from a huge and diverse number of shareholders, which should be a good thing. And they don't have a lot of extra hassles for it. For them, it looks like one LP, or in some cases, if it is, it may be one LP. And because you can't go into, and even mid-sized businesses and PE firms. I used to do a lot of work with Bain. I haven't talked to them about this, but I can guess that, but the reason is because I can guess their answer would be no. They wouldn't want to do something like this because conservative firms like that are very cautious. But in the future, a few years down the road, you say, hey, look, to you, this looks like just one big LP. It's just like going to a sovereign fund. And what do you care if the rest of these world trade stuff? I mean, how cool would that be if you had people investing in Bain and Carlyle and Blackstone, high quality firms like that they couldn't normally do? So those are it's all about the ledger.
All right, so here's the actual big question. We know that the STO, the laws and the regulations for the ICO market are completely FUD, right? They're just they're off the wall. In the STO market, we have both federal and states doing different things, saying what's exempt, what's not exempt, what's an STO, what's not, and they're all also kind of FUD, right? So we have organizations trying to do this, and we have a trade organization lobbying Washington and all this stuff, and that's U.S. focused. But think about it: you got Malta, Singapore, you got the islands. All these people have different laws, and how are we going to standardize a security token offering that could be fluid and global? Right? You could trade on multiple exchanges all over the world all the time with no actual centralized settlement. That's huge, right? But how do you get the regulators on board?
In Switzerland, do you know what the regulation is? What's the differentiation between a security and a utility? How they define it?
No.
Everything is a security except if you can prove that it's a utility. The only way to prove it's a utility is if you can immediately use it. If it's an investment to create a company that's going to become a business that can use a utility, that's already a security. So it's only an existing. That's the law. That's the regulations.
Trade, like I could go list a security token on a Swiss exchange right now.
No, you can't. But I'm talking about the law of differentiation between the two. But the Zurich Stock Exchange is putting up a security token exchange right now as we speak. They should have announced it by the end of the year, but I think maybe early next year it'll be done.
And that's Singapore.
Singapore, Switzerland was first out the gates, I think, and Singapore was always trying to compete. So they followed very quickly and had a definition, or at least have a very open and welcoming for the utility concept if it's not a security. I think when you think about this interoperability and trading all over the world, my current sort of thesis is, so when we raise money for a project, with or without tokens, we do it under the laws of Singapore, but we can raise for any project in the world from any investor in the world as long as we're doing it legitimately under those laws. So I think when we start thinking about how these things are going to trade all over the place, I think the technology is almost the easiest part. It's really going to be the one good things that I've been hearing throughout the last couple of years around the circuits is that this blockchain industry is making governments compete a lot more like never before. One of those reasons because blockchain startups just get up and fly somewhere else, or we're working all over the place. It doesn't really matter. So I think that competition, like Malta's, Gibraltar's, and all these places that had disappeared off the face of the earth, are helping drive the developed market governments forward to try to act and do stuff. So at least from a Singapore's perspective, they're dying to get the business. They just invested into Binance, actually. The Temasek, Vertex Ventures, was announced like yesterday. So yeah, I think their position is also, it's not big enough. If people want to buy this stuff and it's crap, and it's not illegal, then that's okay. And it looks like they're just trying to get the business.
Yeah, I'd love to see a world where the regulators are more concerned. Mostly the U.S. regulations are mostly concerned about the offering. You look at how he was about a kind of a scammy guy raising money. They really care about when you're raising money from people. And there's a lot of ways you can comply with that. But once that stage is passed and things are trading, I would love to see a world, and contrary to popular belief, at least nothing I know of in U.S. securities laws requires any AML KYC. of a security. Now, now, in reality, all securities are in brokers, and all the brokers are required it. But there's no law that says you have to do that. Apple could issue you a paper share right now. I showed some pictures of paper shares. Most of those weren't bearer assets, but there's no reason that Apple couldn't make a board resolution that they can do whatever they want. There's a lot of freedom. There's an amazing number of things that you can do already in the current law. We could create all kinds of things legally on using the open dime and counterparty and Ethereum. We could trade them in this room. You can trade them peer-to-peer. You got to look really, really carefully at the regulations. Say, what does it govern? In the U.S. case, it's mostly brokers. So just forget brokers. Do atomic swaps. Trade it between people. You don't need brokers. So that whole massive apparatus that I've been in for 25 years is obsolete. And then it comes down to the issuance. So what I hope is that you'll see these things trade in these markets. And I think it's going to happen inevitably, because if you have hundreds of thousands or tens of thousands of securities that are trading, Americans are going to have them. People are going to have them in their wallets. They're going to trade them. And regulators are going to be playing catch up to a game where, get this, they actually look for real criminals. Instead of people who didn't dot I's, they're actually looking at like actual scammers. They're going to have, which the SEC has now. They have so much volume that they can't possibly worry about people crossing T's and dotting I's. They say, okay, who's the actual crooks? And that's a wonderful thing. Imagine that if government actually focused on actual criminals.
Well, I think that one of the problems is that, so I work with a couple of software firms and exchanges, and we're all talking to FINRA, SEC, and now we have this DCTA that's going to lobby Congress to help write the laws. It's going to take us six months before something happens here. But the problem is when you talk to FINRA, no one's giving you a straight answer. No one's giving you right now. I do know one thing, that if with one of my software, with one of the software like platforms that actually runs 7 ATSs, the custody has to be in a good position, it's called, or something like that, which is basically a clearing, a settlement issue. And I just feel like the DTCC, who I know, and I've tried to get away from them when I was at NASDAQ, because it's just a bad process for the issuer. Don't you feel like they're trying to just stop everything right now, or slow it all down? And what do you think is going to be the timeline for us to get there? Are we all going to just forget about the actual U.S. and just go offshore?
Bruce, in the real world outside the United States, there is KYC and LM, right?
For securities, though.
I'm coming to that. But it's done by the banks, right? So we all suffer and we all have to do it. But within our community, or the ICOs that came out, there are companies that do it for you. They charge you between $25 to $60 per KYC and ALM. So the business is there, and so that exists, and it's cool, no big deal.
But the problem is, they're gonna have it's fine if you're $175 million little company, but if it's real economy, real stuff, Apple, they're gonna have the same problem DCC has. They're gonna have to manage this database. It's easy, I know some of these services, they have like 9,000 members. It's gonna be harder when you're doing. Look at the volume on there. When you're doing 200 million trades, then they would just end up as a big centralized party anyway.
Right. Which will be through the exchanges.
So as you're going back to this question of what do we think, or what are you seeing as far as the regulatory framework being, will the DTCC, who is creating their own blockchain, they're actually building it, what do you guys think as far as when do you think you'll be able to start listing STOs on your exchanges or in your marketplaces or doing it yourself? When do you think we're going to start seeing a movement?
Just a few interesting points. I guess Singapore has been trialing blockchain exchanges for a couple of years. Because in the security token exchange, you're basically saying, let's get these 8 people in the middle of the trade, and instead of you getting the money in 3 days, they're all gone. The interesting thing about that is the law doesn't actually understand exchange model without third-party custody right now, because we're still stuck in that space. So I think that'll clear out. I think the other thing about the trading and where it goes around the world, I think eventually it does come down to sort of atomic swaps and off the exchanges eventually, but then it'll come down to the issuers. So then it comes down to, as we know, every single time anyone who buys this is a shareholder of your company. In the old world, they didn't know who it was. In the new world, they will, but now they'll have to care. So I guess the question is then, how will that kind of look? Like, and it'll be about structures. So the US actually has some good structures, relatively speaking, relatively speaking, too. And I think the jurisdictions will start to just change their laws to make it better. And you'll see like a BVI or a Cayman or something, and these guys will just start to compete at a level of, all right, well, you got 2,000 investors, okay, we'll allow 3,000, and it'll get better and better over time.
I think you'll see two parts of it. One, the first, in sort of near term, 3 to 5 years, you're going to see, the first iteration, Coinbase, Gemini, Circle, T0, these kind of companies who have made a commitment to be regulated exchanges. They're going to be basically broker dealers. So I think you'll see some of those trading in pretty soon, certainly by Q1, Q2 next year. But I also think parallel to that, there's a whole mess of stuff that you're allowed to do under the law that I don't think you need these people for at all. It is legal. I created that stock with an open dime, and I could do that again right now, and I could sell it to somebody in this room, and then they can sell it to somebody else. And as far as I know, we haven't violated any laws in the United States. And I'm pretty familiar with them. I'm not a securities attorney, but I don't know of any law. If somebody does, I'd love to know specifically the exact text of that law, because I believe that that can be done. If it can be done, then that means it can be done on a huge, huge, huge scale with decentralized exchanges, and you could have huge, massive volume trading.
All right. Well, I just want to say, thank you for actually joining us. Please give them a round of applause, and we'll go on to our next panel. I'll hand the mic.
Amazing.